So we're hearing a lot more and more about the US debt ceiling debate. And this is a debate that's going on in the US within their government. And what the US debt ceiling debate is all about is the US being able to pay their bills. Just like any one of us, right? We need to pay our bills so that we can continue to have the services or the goods that we need to survive and thrive. The US is no different. They have bills that they need to pay. They have people that have borrowed money, or they have borrowed money from, I should say, not they have borrowed money, but they have borrowed money from countries like China, Japan, and many others that they need to continue to pay interest on their borrowings. If the United States does not increase what we call their debt levels, then they won't have the money to be able to pay interest to the people that they borrowed money from. They also have to pay government workers, and many other bills that they need to pay. Interesting chart we have on this. If anybody wants to know what the government of the United States is in debt right now for, well, you're looking at about 30 trillion. That number has moved up significantly over the past, let's call it 20 years. Really started to move higher in 2010, as you can see, over the last 10, 12 years. And so you have the Republican side of things. They're saying they will increase the debt limits so that the United States can continue to pay its bills, but they want the spending to slow down. The Democrats are saying, well, we need to continue to spend to survive and thrive, and you can't hold us hostage. This is the President of the United States saying this, can't hold us hostage because you're increasing the debt levels so that we can pay debt that we've already spent that money. This is debt on this is money we've already spent. So we need to increase these levels so that we can continue to spend the money. So there's this debate going back and forth. One side wants to have the flexibility. The other side wants to limit how much they can spend. And this can become a real problem. As of June 1st, the United States is going to be bumping up against their debt limits, which means they won't have the money to pay their debt. We saw in 2011, when they came up against this level, the US lost their AAA credit rating. And we don't want to see the US lose their credit rating. Some people actually predict that you could see the stock market fall perhaps as much as 10% if the US defaults or comes close to defaulting on their debts. So keep an eye on the negotiations out of Washington. We're starting to hear that they're negotiating harder and more frequently now, which is a good thing. Hopefully they'll come to some resolution. Many people think they're just going to kick the can down the road, as they always do, maybe to the end of the year or into early next year. But we need a resolution to this issue, because if the US does not pay their debt, this will spill over into the stock market and a lot of other problems will arise because of it.